So you've been thinking about buying a new house, and you want to buy a house with no money down?
That can be done.
There's an app for that. Hello, my name is Barry Horvath, and this is Moving Forward TV, your local market update.
Hello, and I am DeLynn Gaston. Thanks for joining us today. We are talking about a no down payment program. No down payment. So you want to buy a house,
Woohoo!
but we don't have any money.
Woohoo!
That happens a lot. Yes, you can do it. It's the USDA Rural Housing Program.
You told them everything already. All right, thanks
no,
for coming,
no.
everybody.
They don't know
Have a good
about
week.
it.
We'll see you next week.
There's a lot of positive things. I know that everybody knows the program is out there, but there's sometimes people don't really understand the really great parts to the program and the not so great parts to the program. So we kind of wanted to highlight that today.
Absolutely. There's a lot of great things about it, and a lot of people don't realize that there's a lot of areas that are USDA approved areas.
Yes.
You don't have to live out in cattle country to get this loan.
Right.
And that's, even though it's considered a rural housing farm loan originally, there are lots of areas that you can actually buy a house with no money down.
With no money down. So let's get to the really highlights of the program. First of all, 100% financing, no money down.
Woohoo! And there's actually, every one of these type government loans usually have some kind of funding fee, like your
Right,
VA loans, FHA loans,
right.
a premium they put on. This one has a 2% fee, and it gets stacked. It can be stacked right on the loan if you choose.
You know, it's almost like people say to me all the time, can I roll my closing costs in? Can I roll my down payment into the loan? Yes.
In this one, you can.
You know, in a way, it kind of
Absolutely.
is like that.
And the other thing is, closing costs can be put into this loan.
Right.
And
depending
it depends
upon
on the lender.
Appraisal and the lender, yeah.
In
All
some
of these
cases,
depend on
all
the
of the closing costs can be put in. So
Right.
it's going to vary by your bank, but USDA actually doesn't have a cap. So check with your lender to see what they allow.
And if for whatever reason it can't, well, the seller can also pay those closing costs. Just like on FHA and some of the conventional, the seller is absolutely positively allowed to pay some of those
Yep.
closing costs as well.
Now, here's my favorite part.
What?
You remember all these rules that came out a couple years ago about appraisals, and
Oh,
we
I
had
know.
that. The way it works in today's world. This is today's world today. We send an order into appraisal land, as we call it, and it goes to some appraisal god in the sky, and then they go out and they randomly pick some appraiser, and we hope it's a good one. Well,
Right.
in the USDA loan, it's just like the old days. We can go in and we can actually pick the appraiser. So find your favorite appraiser, get your buddy, and get him out there to do the appraisal and get the value you want. Isn't that how it works?
Absolutely. It's just like the old days. We get to pick the appraiser, so we don't have to worry about any of the HVCC laws or rules or regulations anymore. Now, all of these do have to run through the automated system, just like any automated system, FHA, Fannie Mae, everything. And it's called GUS.
Gus, the mule.
GUS.
Gus.
The cow. But anyway, it has to run through their system. So expect a little bit more time with these, because once the underwriter does their thing at your lender and the whole process goes through, then it has to go to USDA and they have to approve the loan as well. So they take maybe an extra week or so.
Or so.
Or so.
That's the key word. There's a disclaimer.
It
Or
depends.
so. Check with your lender.
Well, and all
Because they
over the
only-
country, because USDA offices are
And they only fund
nationwide.
certain times, from what I understand. So,
Exactly.
So you got to be careful about that. The other thing on this loan is, those of you who love to waive escrows, this loan is not for you, because you must have escrows
Yes.
into your payment. So taxes and insurance must be included in the payment. So there's no waivers, no exceptions. Doesn't matter if you get the loan to value, put 20% down, whatever, you're paying escrows.
The other thing, as far as credit go, there's a lot of questions as far as credit. Oh, you got to have golden credit and everything. No, not necessarily on this either. Just like FHA and some of the other guidelines, most lenders have their own overlays as far as credit scores go. But for the most part, most of the lenders are doing them at a 620 credit score, minimum credit score. And then also, just like the other lenders, they are going to be following the FHA guidelines.
Like
as
bankruptcy,
Exactly.
foreclosure,
Short
short
sales.
sale.
3 years.
3 years as it got, but again, check with your individual bank. Every bank has their overlays.
But you know, this is really great because so many people did get caught in that and have a short sale or a bankruptcy or foreclosure or something like that a number of years ago. Now you can actually get into a house. So many people are just like stick their head in the sand and they're just afraid to venture out into home buying again. You can do it. And you say, oh, but I'm going to have to save up like, $100,000. Not necessarily. This is a great product for you if it's been a few years and you're okay.
So you can lend me my down payment for this.
It can be done.
Okay, now let's talk about the things that aren't allowed. DeLynn?
Really? All right, there are a few things on here. I thought you were going to go with this.
I love when I catch her off guard. She had no clue. She thought I was just going to say it all and explain the whole program on my own.
It says very.
Come on.
There are some things in this program that we do have to be careful with. First of all, it is for owner-occupied properties only. And even the co-borrowers have to occupy the property. So I know on FHA and some of the other programs, you can have a non-occupant co-borrower, not in this. Everybody on the loan has to basically be in.
What she's really trying to say is that it must be your primary residence. No investment properties.
No investment properties. And only single-family houses, single-family dwellings, no investment properties at all, no 2 to 4 unit properes or anything. Right. But that does mean condos are allowed. And again, there are definitely some
condos on the farm.
Lender overlays. Yeah, I know, really. Other condos out there.
Hey, I'm up here on the 27th floor.
Manufactured homes are allowed, but again, lender overlays on things like that.
The cow is downstairs, the high-rise condo, 27th floor. It just doesn't make sense to me.
Yeah, exactly. Probably not. Okay, but here's some big factors. Now, here are some of the limitations with the program. And this we can't give you an overview on. You have to go to the website. USDA's website is excellent, and it's really user-friendly. There are income limitations, and there are very specific property location limitations.
There's an app for that.
There is. Actually, you could probably get it on your phone somewhere. I'm sure you can.
I'm sure you can download it.
But anyway, income limitations.
Income limitations
Barry?
is a big deal to land. Thanks. All right. It is based on every zip code will vary on the income limitations. The number of people in your household affect the income limitations. There's deductions for the more you have. But you must remember, anybody over the age of 18 and
who has income,
you must declare it.
Even if it's a part-time student, that's fine.
They still count towards that income. So you need to look at that before you really, consider it. So I always tell people the first thing you want to do is go to the USDA.gov website, put in the address of the property you are looking at, and
put in your income figures.
And then figure out to see if you're going to qualify.
And keep in mind that 18-year-old son or daughter or whatever, they don't have to be on the loan. No. Or, even if you have an elderly parent living with you.
Kick them out. That's what I say.
Just
kick them out. They're 18. Get them out on their own. The sooner the better.
Oh, I thought you
Plus
meant kick out the elderly parent.
I would never say that. Mom, if you're watching, I would never kick you out.
And she watches all the time.
Yeah, I would never kick you out.
Yeah, so whether they're on the loan or not, their income is definitely going to count into the household income, but it's not going to count to qualify for the loan.
Exactly.
So be careful with that. And then the property. Now, here's a couple of reasons why you're going to want to do this sooner rather than later.
I got all the reasons.
You do?
Now let me start with this.
Okay, go ahead.
First of all, the Olympics are over. There's no baseball yet. There's no football.
So he has nothing better to talk about than USDA.
Go on out. Go play with the cattle out in the country and go find a house. It's a good time to do it. So
it is.
There's no better time, really.
Because, quite frankly, right now, the USDA, as we said, it is very, very property-specific, zip code, and you can go on the website. It's very user-friendly. Like I said, put in the address, and it'll let you know if you're USDA eligible or not based upon the property address. However, right now, what the USDA is using is the 2000 census tract figures.
Isn't that like 14 years ago?
Yeah. Remember a couple years ago in 2010, they were doing all those census things?
When we were in our early teens.
Yeah. Remember a few years ago, everybody was getting these part-time jobs, helping with the U.S. in 2010, doing the census tract figures and everything, and they were sending those letters to your household all the time. Guess what? It's all for things like the USDA. Right. So Come October of this year, October of 2014, they are going to start using the 2010 census tract numbers. Well, guess what, folks? We kind of took a look at that to see the differences that it makes in our area. Just right here, where we know there's some USDA housing right now, out along the 54 in Pasco County alone, we took a look at. We have the pictures up here, so there's going to be some really big changes. So right now, where you are absolutely in USDA, like the Longleaf people and some of the out the 54 corridor, some of those really nice subdivisions that are currently USDA right now, you can get in there with 100% financing, no money down. Guess what? Come October.
Bye-bye.
Bye-bye.
Bye-bye. All right.
You got to go out to Brooksville.
Now, here's the better reason. This is what people want to hear. This is what I discovered, okay? Not only should you do this now because time is ticking, we did a payment comparison to another Govy loan called a FHA, right? A FHA loan.
FHA?
FHA. That's a FHA for those who don't get us. The FHA MI, as you guys know, keeps going up and up and up and more expensive. This one, this USDA, is dirt cheap. I mean, it's almost free, senor. Almost free.
I know.
Almost free. Comparison, MI, just on a $100,000 loan. This is just a guideline, so don't go to your lender and beat them up and say, hey, Barry said it's this. It's about $112 a month for the MI on a FHA loan, and it's about $33 a month on this USDA cow loan. So I would get the cow loan.
So big differences.
That's
so
huge.
if you are considering buying sometime this year, but you wanted to like save up some money first, you know what, guys, jump in right now because there is no time like the present to do it. I know we say it every show, but we're not kidding. When the clock is ticking, it's ticking.
Yes. So our producer just reminded me that this show soon, probably in the next month,
Coming to a theater near you.
yes, it'll be the same stuff, but we're going to be live. So no more cuts. You guys will see all our screw ups. You're going to love it. It's going to be perfect for you. It's going to ruin us. I'm going to have to drink more coffee before I come on. That's all I can say. But
Same mortgage time, same mortgage channel.
yeah, it'll be all over the place.
Coming up soon. We'll let you know, though.
Yeah, so get us out still. Share us on YouTube.
Thank you for your support. We appreciate
Yeah, we do.
you
We're
guys
getting more
us.
views. It's
Yes.
amazing the support we get and likes and shares on Facebook, Twitter.
And if there's something more you guys want to know a little bit more about, by all means, email us, message us.
Yeah, DeLynn's always
tweet
available.
Us, whatever.
You can email her, call her. She's up all night. Trust me.
We'll be happy to fill you in on what's going on.
She dreams about this stuff. So
That's it. That's our show. We are today and every day.
moving forward.
We'll see everybody next week. Take care.